What has happened to the market in past election years?
Man, that is the most common asked question during my appointments. What do you think is going to happen with this election? Lots of concerns,
Hmm.
about what might happen based on who wins. And I hear it from both sides, actually.
Hmm.
People worried about Biden winning, people worried about Trump winning, because I have a broad spectrum of political, ideology within my practice, no doubt. Matter of fact, extremely broad. However, uh, the president, all by himself, often doesn't have a huge impact on the economy per
Hmm.
se. Uh, I don't know. There are some things you would say, okay, if the Democrats are in control of Congress and the White House, they might spend some more. You might have that problem with an inflationary time frame,
Yeah.
right? That type of thing. On the other hand, if it's a Republican-controlled situation, you might see some tariffs on China, which, last time they went after tariffs on China was the end of 2018. The market dropped 20%.
Hmm.
Uh, and the Fed was in the process of raising rates at the same time, both of which were slowing down the economy. So, the Fed ended up lowering rates in 2019 and things did okay. But ideally, we're looking at like what happens, in a normal year, right? So we
Hmm.
have some stats to kind of show. And so here, this is done by BlackRock. This is an excellent piece here. Just going back to 1926, they're using kind of a large cap index from
Yeah.
26 to 1970, and then they're using the S&P 500 from there to now, at the end of 2023 anyway.
Yeah.
And so the average return there is 10.3%. So that's something to keep in mind. If you're making more than 10%, which has been happening, we're higher than that this quarter,
Yeah.
right? For the S&P. So that's pretty out of the norm, right? Presidential election years are higher, 11.6%,
Hmm.
right? So on average, it's a good thing. Kind of fascinating, and we were talking about this earlier, midterm election years are lower
Yeah.
by a fair amount, actually. Uh, and if we look at, non-election years, those are the best ones. So last year was a good one, and it has a little bubble there showing 26.3% for the S&P 500 last year, which is way above average, of
Yep.
course. And it's kind of interesting to me. I guess it's just there's no uncertainty, at least in an election cycle component, because there's no midterms, there's no presidential, and so their rate of return's higher. There are probably other factors that factor into
Yep.
there. But this is another chart that came out from American Century, just showing, okay, what happens if during that midterm year, and it's down. So they show all the down ones here, 46, 62, including our
Yep.
last midterm cycle,
2022.
2022, down 18.1%, right? What happens during the election year a couple years later, right? 5.5, 16.5, 11.1, 23, all positive.
Hmm.
Some of those numbers are actually pretty big and
Yeah.
above average too. Matter of fact, there's one, two, three, four or five of those that are above average.
Yeah.
So that's the majority. And so again, here we are at 2024. We're already up 11%. We could give some of that back. The year's not over. There's all
Yeah.
kinds of things that can happen there, but it is looking, positive. But the results for previous negative midterm years led to positive presidential election years. That's kind of the point here. So we have that going in our favor. Then you look at break the year into quarters. Kind of fascinating. So the first quarter, second quarter, historically are presidential years. They're actually less than the average quarter.
Yeah. They tend to underperform.
Yeah, now that didn't happen for us. We're up a lot this first quarter. There are some other impacts here. We have lowering inflation, lowering interest rates, artificial intelligence, etc. But the third quarter is the big one.
Yeah.
So basically, as we go into the election itself, September, October, November, um, I have seen personally, I haven't done a study on this, but just my experience, the market jumps after the election, almost no matter who's
Yep.
in office. It certainly jumped the last time. It jumped in 2016, so it'll be interesting to see what happens
Someone's
this
always
time.
happy when.
Yeah, there is a group that's excited about what happens. Historically, the market actually likes a bifurcated scenario where you have the White House and Congress some division.
Yeah.
And the market doesn't do as well when the party is completely in control of both, House, Senate, and White House. And so, kind of depends on what that mix comes out to. The market likes stability, and well, it's because the companies like stability. They're investing, millions and billions of dollars in different projects, and knowing that Congress can't get anything done that probably helps with some of the clarity. So, ironically, companies are looking at this, and that's why you see Wall Street do quite well there. And then, of course, what happens if it's a contested election? Right? Because we've had a couple of these. So 2000, right? The Florida recount, the hanging chads, that went to the Supreme Court, and the market dropped, right? Prior to the election, during the contested period, and a month later, right? Yeah. That was a really big one, and it went through all the way to the Supreme Court. Now, if you look at what happened in 2020, it was contested in terms of, lots of court cases, but they were all over pretty quickly.
Yep.
It didn't go to the Supreme Court. And really, there was, I think, out of the 60 that I remember happening in 2020 timeframe, there were only 59 of them were ruled against, and one was positive. So, I would think that if we have another contested election, it'll be a lot more like what happened in 2020 than what happened in 2000, personally. So, and obviously the market did fantastic. Really went up a lot in that time frame. So it's kind of interesting as far as that goes. So then the last thing is just, what happens with the Fed, right? Because this is a big deal. The Fed, in my opinion, tries not to do anything because they don't want to impact the election. But they're lining up right now to do rate cuts they just did their dot plot, so they're going to do 3 rate cuts this year.
Yep.
Every interview keeps talking about the second half of the year, which is really the election time period. Maybe they squirrel some of them into the after election, to the later November or December timeframe, and maybe they only do one before. It kind of depends on what they can get away with. But there have been rate cuts and rate hikes historically, during an election year. And if you look at the numbers there, actually, they're all pretty positive. Now, this is for bonds, right? Different look, a different market. Still important to look at bonds. We have a lot of money in bonds here as a practice. But you look at those core bond returns, 7.5, 5.2, 3.6, 7.4, definitely better with rate cuts. So again, something to think about for you that have bond holdings that could be doing quite well here once the rates cuts really start also. But even during rate hikes, they did okay. 2.7, 4.3, and 11.6. So again, these are all kind of election year issues. What happens with what parties involved? Is it contested? What are the average rates of return? Which quarters do better? I think this is really interesting information. To me, this is all positive. I like presidential election years, at least from a stock market standpoint. Sometimes the ads get to be kind of irritating because they take over, but just that's personal. It's more just from a money making standpoint. I think that this is an okay thing altogether, and I'm not too worried about it. I'm much more concerned with what might happen with inflation. To me, that's there's geopolitical risk, there's all kinds of unknowns, but the one thing that I think is the most known is that inflation has been a little bit hot here for the last couple of months, and this market is taking off and it's going really hot, and I think it can stay hot, and I think that could cause inflation itself to come back up or at least hold. And so that's where you got to be careful if you're the Federal Reserve, especially if they're going to start lowering rates. We don't want to see inflation coming back up again, because then they'll be going the opposite direction with rates, and the markets don't like that. So anyway, that's what's happening with that in the presidential election. Great question. And again, we put that in there because we've been getting asked it a lot within our clientele.